Welcome to Counsel Culture, the Business of Law podcast brought to you by Byfield. Welcome back to Counsel Culture, the Business of Law podcast. This week, very special episode. This is the first episode that we've got that's actually recorded on camera as well, so this is exciting. But today, I've got Eric Staal from Lex Mundi. You are the Vice President of Global Markets. Hello, Eric. Lovely to see you in person again. I think it's been a year since we last spoke, actually.
Seems about that, yes.
Yeah, about that time. So it's good to see you in person. You're in town. First of all, how's London so far? I mean, you've been here for just a few days, so how do you feel like just being here again?
Correct. It's just been a jam-packed couple of days. We're part of the Enterprise GC event with the Legal 500 over at Hilton Wembley.
Yeah. How was that?
We were able to hold a breakout session on cross-border risk management and looking at stakeholderism.
Okay.
And then how stakeholderism has really performed or held up under the challenges and strains of the difficult economy and economic environment that we've been in. And then we had a panel session following that on risk management with some fairly high-powered General Counsel that we work with on a regular basis.
Right.
And we're able to share some interesting insights, I think, with the participants there about geopolitical risk and, what are some of the risks facing UK-based companies as well as international companies.
That's super interesting. And I guess this will be the main topic of today's podcast. But so in the past, I guess, how long has it been now? 2 years. Yeah, we've had war in Ukraine. Obviously, we came out of the pandemic towards the same time. Obviously, Israel-Hamas for the last 6-7 months. I'm sure I'm missing something else in the middle as well. But so how are GCs kind of... How do you see them navigating those risks? And I guess some of those, I mean, both the conflicts that we're seeing at the moment were quite sudden in terms of how they escalated. I mean, Russia just invaded. And I guess, in October, things moved very, very quickly. So, yeah, what challenges are they facing and kind of what resources do you see them using to face those challenges? I mean, I guess their role is expanding to respond to these crises with their own companies.
Most certainly. I think most GCs are finding themselves in this difficult spot of always trying to do more with less, but in this case, really having that lack of predictability of what's going to come next in the environment, and yet needing to have a response to that.
Yeah.
Because not having a response is not sufficient. And, if they don't respond or can't respond, then the company will have to look elsewhere to somebody who can. And so few GCs really have the resources in-house or even externally necessarily on speed dial and Rolodex for wherever the next flashpoint is going to be.
Yeah.
And I think these two crises together have brought them to that realization more than ever that Ukraine might have been a one-off, for instance, and we can get through this and things will settle down. And we know that things are going to recalibrate around Russia and what we need to do with Russia to be able to comply with sanctions and whatnot. But then when the October war happened and started in Israel, I think it made everybody come to a deeper realization that this unpredictability and this volatility is actually more of a steady state. And it's something that we need a longer-term resilience plan around to think about. And so you're in a situation where, if you think about it, law is traditionally something where you rely upon precedent to guide you.
Of course.
But we're moving into such unprecedented territory that that reference point isn't there anymore.
Absolutely.
And so we have to just be thinking about the new landscape in a new way.
I mean, and I guess it's not just I guess for a company, and I think we've seen that across the globe, I mean, responding to that is, to any kind of issue like that is quite difficult just in terms of the immediate, making sure your people, if you've got a base there, that they're safe and, having to evacuate them if need be and things like that. But also just, I guess in Ukraine is a good example for that in terms of investments and whatnot. If you're a financial business, all of a sudden, and I guess many others, because we've seen big corporates like McDonald's and whatnot, you come under fire for still operating in a jurisdiction that is seen as aggressive and whatnot. So it's kind of from a PR perspective, from a business perspective, and comms perspective, like everything just comes together where it is a big crisis very suddenly to manage. And I think there's a lot of compliance and due diligence there that needs to be done very, very quickly. That would be really difficult, I imagine, for GCs to handle just by themselves. What gaps do you think need to be filled at the moment in responding to such crises from a GC perspective?
Well, certainly one of the obvious gaps that everybody's talking about, I think, and there are different resources being formulated to step in to fill it, is having the expertise on the ground.
Right.
Who can really understand not just the law, but the context of the law.
Yeah.
Who's making the decisions? How might the decisions be applied? How might they be applied in specific situations and so forth? Matched up or to that, there needs to be a broader policy guidance approach to things.
Yeah.
And so compliance with sanctions is an example that you brought up. And certainly that's something that's difficult, but on the other hand, that is fairly transparent as far as those emanating from the US and the UK and the European Union.
Yeah.
What's a little bit trickier is beyond just the sanctions of it and the compliance of it, and that piece that you mentioned. What's a little bit trickier is actually getting the policy from a corporate level correct. So you will want to comply with the sanctions, of course, but you'll have to think about what are our obligations, morally speaking, to our customers in the market.
Of course, yeah.
If you're a pharmaceutical company,
Yeah.
or if you're providing critical equipment and technology that help utilities run,
Yeah.
or help supply energy, to Moscow, where people will freeze to death if they don't get it, then do you withdraw from the market and deprive your customers of having access to the things that are going to give them and sustain them through a difficult winter, versus trying to comply with the letter of the law,
Yeah.
or to have a reputational point to be made about withdrawing.
Yeah.
So you brought up the McDonald's example, and there are other examples where GCs have said to me before the company is ready to make that pronouncement, we're withdrawing too, because that's the right thing to do,
Right.
to
Yeah.
boycott Russia for the Russian invasion and the humanitarian crisis that they've created there. They've said, but what about our obligations to our personnel who are depending
Of course,
upon us
yeah.
for their livelihoods? What about our obligations to that market, to the customers, and to the people who will be, impacted very severely if
Yeah.
we don't continue to provide critical services or technology or products that they're relying upon us to deliver? And so being able to balance those dilemmas is where truly I think the role of the GC comes into play,
Right.
as
Yeah.
a strategic advisor and trusted advisor to the C-suite of the company and to the board of the company,
Yeah. Yeah.
so that they're in a better position to make those balanced decisions and figure out the right approaches, rather than just reacting in a knee-jerk sort of way
Yeah.
to satisfy what might be a public relations interest or a public relations demand upon them.
Absolutely. I think it must be so much pressure for GCs to be in that position of answering to so many different stakeholders with different interests
Yes.
for each of their department, because I
Yes.
guess they will be conflicting. It's fascinating. In light of these kind of these challenges that they're facing, I mean, how do you see them cooperating with external advisors, and kind of how's the relationship affected, if it is at all, in responding to those crises?
Yeah, well, I think if you take a step back, and I look at it as if we're on a three-way collision course
Right.
in the world right now. And one is geopolitics and the uncertainty in the global security situation, which has deteriorated immensely over the last couple of years.
Yeah.
Not just with Russia, Ukraine, but let's face it, in Israel, we have an Iran proxy war with Israel going on.
Yeah. Yeah.
This is more than a war on the Gaza Strip, and that's creating different allies and different fronts and different coalitions internationally to come together
Yeah.
to think about how they want to respond to that.
Yeah.
And then you've got obviously the situation out in the Asia Pacific.
Of course,
and there are other flashpoints, of course. So you've got the geopolitical strand, which is on a collision course with the two other strands, and one is climate change and carbon transition and carbon neutrality,
Yeah.
and the other is AI.
Yeah.
And the AI one, I think we're starting to get a realization around that. We saw recently the agreement that the Biden administration has set up in the Gulf region with countries there. And what that's about really is the use of energy that is going to be required for the next stage of large language models
Yeah.
and the cost of investment that's going to need to be made to make that next step in the use of Gen AI. So when you bring those three things together, you see these are almost irreconcilable trends.
Yeah.
And they are on a collision course with one another. Now, what's happening in each of those spaces is in a very significant degree of regulatory proliferation and fragmentation.
Of course,
So
yeah.
what that means is around the world, just an incredible amount of new regulation coming out. Nobody really knows what AI regulation is going to be in many places and how it's going
Yeah.
to apply. There's ESG regulation, especially in Europe. There's the Corporate Sustainability Reporting Directive, which is coming into force and requiring companies to report on their value chains down to deep levels of that and who their partners are and suppliers are, as well as who they're working with. And so those disclosure requirements are going to put a massive demand on people. And then you've got, because of the geopolitical crisis, you've got the bifurcation of a China bloc and a US bloc, if you will, around not only AI technology, but around trade and investment flows, foreign investment restrictions, and so forth. So what that means is that GCs are finding their traditional panel arrangements and their legal advisors that they would turn to are rather insufficient to flex with a very dynamic regulatory environment.
Interesting.
Because law firms are set up over a long period of time to function in certain places to provide certain types of advice where they see a good return on their investment.
Of course.
That happens to be in major capital markets where transactions can be facilitated and happen. And that doesn't happen to be where law firms or where companies are operating across very diverse jurisdictions with increasingly fragmented and sometimes contradictory regulatory environments. And so that's requiring them to seek a level of guidance locally that they haven't had before, but that can be joined up in a way to give that broader global policy direction, support, and guidance that I referred to a little bit earlier. And so how do you combine those two things together? Because there's no single organization which can give you that from one hand.
Of course,
basically.
yeah.
And so one of the things we're starting to see is that GCs are turning to alternative sources and approaches for legal
Such as?
advice. And of course, we think at Lex Mundi, we think we're very well established for this.
Yeah.
Because we've been set up for 30 years. We have deep relationships on the ground to law firms in 125 countries.
Yeah.
And we're able to tap into them as and when. And they know that when we're approaching them with a client, that there's an additional benefit to being responsive to that. So we're able to orchestrate the local counsel for the client in a way that isn't done as efficiently sometimes from a large international firm that's working with various local partners from time to time and on a one-off basis. And in a very transactional situation, our relationship is relational, not transactional to the law firm.
Of course.
So it creates a different incentive of cooperation. It also creates a different dynamic of cooperation that we're able to achieve with the local counsel. So we're able to bind that together, and it's very helpful to the client when they're trying to navigate uncharted waters as far as regulation around things like, let's say there's a technology which may have an ESG implication for the company if they launch it, because it may mean that the company's technology is facilitating the extraction of critical minerals for carbon transition.
Yeah.
But nobody likes mineral extraction because it does environmental damage.
For sure.
So what are we doing? Are we going to achieve carbon transition, or are we going to extract minerals?
Yeah.
But we may not be able to satisfy both concerns, and they need to get the regulation right, but they also need to get the context of the regulation correct so that they can give the right guidance to the board of the company and the leadership of the company about the decision to make those investments, launch those products, bring that to market, and how do they do that in a way that doesn't compromise their ESG performance as a company and the things they're very committed to doing. So these are issues that we're seeing come up on a regular basis.
Yeah.
Do we make an investment? Do we go for that product? What kind of partnership do we want with commercial counterparties to be able to do a certain type of strategic investment or a move? What kind of diligence we want to do on a transaction to make sure that we're not inheriting the wrong kind of liabilities?
Yeah.
And these are all areas where you didn't really have to think about it 5 years ago.
Yeah.
But now you make a corporate strategic decision, and you really need that to be a part of your analysis
Definitely.
of a market, of a market opportunity, of an investment decision. And it can only be done really with the right people on the ground who have the right local insight.
For sure. It's interesting because I was reading a Lotocom piece that dates back to January, and they were saying as well a lot of companies are also hiring, let's say politicians or like political advisors and whatnot to kind of answer for very particular crises relating to geopolitics and whatnot, and other experts in different areas as well. So we're seeing that a bit more too, but it's fascinating. What are the kind of biggest in-house challenges when you're managing a cross-border situation, whatever it may be, whether that's something as simple as, I don't know, there's a protest at one of your branches in south of France. That's realistic, or
never would happen. That would never, not in France,
not in France, or something much bigger where I don't know. Yeah, you've got an earthquake or something happening somewhere, and you've got to evacuate everyone from the zone, and like how, or even if it's just a political issue as yet leaving a market. Obviously, I think a lot of companies are starting to think about China in those terms, and Hong Kong as well. Sadly, what are the biggest issues that they're facing in managing those types of issues, whatever they may be?
Yes, yeah. I mean, one of the topics that came up in our panel discussion yesterday was crisis management and stakeholder management. So, in that space, there are some interesting learnings. And one of those learnings that's relatively recent is if you looked at crisis management 5 years ago, let's say you would be talking about having a plan in place, a crisis preparation plan. There would be probably everybody on a WhatsApp channel that you would use for communication because it could be a cyber hack and you might not be able to communicate. You need timely, effective access to one another. And there would be a division of roles and responsibilities. Who's going to speak for the company? Who's going to speak to the stakeholders? Who's going to speak to the authorities? And so forth. And so it would be fairly well outlined and fairly well planned as to how you would want to go about approaching that situation based on learning from, let's say the BP oil spill in the Gulf of Mexico years ago, or based on other cyber hack situations that have occurred where we've been able to take some good learning points. And what came out of the discussion yesterday was that actually some of these crisis preparation plans aren't really going to be sufficient anymore in what you're going to need. And what you're really going to need is a reactive resource to help guide you through in the moment what's happening, because whatever that crisis is going to be, it's not going to be something we've really seen before.
Yeah.
And so the examples you brought up are brilliant as far as, let's say you have a crisis at a branch in Hong Kong or something going on in a factory in China. Then what you're going to want is obviously local guidance and people on the ground to be able to speak to and deal with the local stakeholders. And some of the insight that came out of the discussion yesterday was that where things have gone wrong is where you've had the wrong decision making at the wrong levels. And so you might have corporate leadership at HQ trying to drive the bus and not necessarily tuned into or listening to what they're being told locally about how things are being managed.
I can imagine that.
And in those cases, what you would really want to be doing is empowering your local staff, your local leadership to be able to give input and make decisions, to speak locally to the public or to the stakeholders that are concerned. And then, from the long-term planning point of view, that can still reside at the corporate HQ.
Yeah.
But there was some thinking in the panel discussion that having that balance right between local empowerment to react and feed into global HQ, and then letting global HQ set the long-term direction and maintain that would be the right balance. Now, obviously, every situation will be somewhat differently.
Of course.
And we're having to generalize, you don't hear about them. One of the things that came out of that, though, as well, is on the stakeholder management side, we've got to get comfortable with the reality that not only geopolitically and politically speaking, but also in terms of corporate activism and public activism, we're not always dealing with rational actors. At least
That's
not
very true.
at least not in the rationality that we apply in our Western thinking.
Yeah.
And so listening to the demands and trying to understand the interest and respond to those interests sometimes could actually play into the hands of the other side in ways that you don't want to do and could exacerbate the leverage they're exerting over you. So there are some times when demands are being placed and made upon you that essentially are not coming from a place of genuine interest. And there's another agenda happening that you need to be able to understand and appreciate how to then start to negotiate with irrational actors. And I think that piece around negotiating with and dealing with irrational actors is probably the biggest gap that I see in the corporate world today. And the tendency has been, satisfy whatever the demand is, try to tamper it down and de-escalate it, don't fuel the flames, and let's move on. And that has taken us far, and it can take us far, and it is appropriate in many situations. But I think we're starting to enter a world where there's greater and greater appreciation, needs to be better understanding of that sometimes what we're dealing with are irrational actors on the other side. Absolutely. And then we need a different negotiating approach to that. And we need to really think hard about stakeholder diligence, stakeholder intelligence, stakeholder influence that is very different than just responding to and then trying to hopefully contain an issue so that we can move on. And sometimes it's not about containment. Sometimes you need to neutralize the concern.
And I think a lot of these actors, we're seeing that more and more in the UK at least, where you do get a lot more, external actors that then buy shares and then use that as a way to hold the board accountable,
right,
and to change the trajectory of the business,
absolutely,
sometimes via litigation. For now in the UK, no kind of shareholder action relating, so usually to ESG issues. They've not so far led to anything yet, but I think at one point there will be a breakthrough where one of them will actually lead to something, whatever that may be. So I don't know if in the US, I guess that probably has been in place for longer, but it's interesting because sometimes they might be acting irrationally in a certain way, but then all of a sudden they do have a say in your company and where it's going, and that becomes a bit more rational in a way, in a weird sense, where it's hard to explain what I'm thinking of, but it's kind of, one day they're on the street and, throwing paint at your HQs, and then the next day they've actually got a couple of shares and they're threatening legal action against you, which is not actually irrational at all. So it must be quite hard to respond to that as well. But
well, I think in the case of gaining, let's say, shareholder influence, that's something that has manifested quite considerably over a good number of years now. And it hasn't always been irrational, and it has oftentimes been for a good purpose and with good results. So if you think about the mobilization of the asset finance industry for ESG purposes, and their ability therewith to shift many companies toward greater carbon neutrality and greater carbon transition. That's been by and large, I think, a positive effect that we would all agree with. Now, there have been cases where it's been actually through a very, very small number of shares that kind of influence has been exerted. And the classic case is some years back, Engine Number One acquiring less than 1% of shares of ExxonMobil. And through that, actually being able to put together a coalition of investors and shareholders to represent a climate change interest and win a seat on the board of that company and ask the company to actually redirect its strategy. Right. So that's a classic example of a positive outcome from a minority shareholder campaign exerting incommensurate influence with its shareholdings and yet achieving a certain result. But as you say, it could happen that could be done in such a way where the interest may not necessarily be a carbon transition and a better outcome for everybody. It may be that actually the interest is in shutting the company down because they think that the company is immoral and shouldn't be operating in that business in any capacity. Now that would be a very different interest, and then the demands would be very hard to ever satisfy from the corporate point of view and the fiduciary point of view, because the only demand or the only response that would ever be satisfactory would be to go out of business.
Then again, I think most people that have those shareholder actions don't actually have those views because it's not I think at that point it's not in their interest either. So so in a way it's interesting. But is there anything else you wanted to discuss today? I know that your annual report came out a couple months ago, so I don't know if you want to mention that.
Yeah, we did a report coming out, you're right, I think in February, called Opening Pandora's Box, about implications of generative AI for corporate legal management.
Yeah.
And where we were finding that GCs were very interested in discussing Gen AI and how it would impact them as a corporate GC. And whereas I think one of the interesting aspects of the report is whereas much of the discussion around Gen AI was actually focused around the legal practice of law and the role of lawyers and how that would change and how law firms would change.
Yeah.
We recognized that there was perhaps an aspect of Gen AI that was being slightly overlooked in the legal discussion around it, which was really the way in which companies are rolling out and implementing Gen AI technology and what kind of legal liability that could create for the company, where the GC would have to give guidance and input to the company.
Yeah.
So that meant GCs were having to learn and get smart very, very quickly on an area of law that is still not in existence, if you will.
Yeah.
And the implications of liability for use of Gen AI is coming from, product liability law, consumer liability law, compliance and data privacy and other areas, but it's almost a multidisciplinary spectrum of legal issues where it's being drawn from to give guidance to what that's going to mean. But what's been overlooked is that there have been some very traditional areas that have been recognized as having exposure, such as IP and copyright. And there are major cases, obviously, under litigation with respect to LLM models that have used content from people who think that it was not fair use.
Yeah.
And then there's a number of other issues which have been truly overlooked, like antitrust implications of use of Gen AI, violating obviously consumer rights or violating the rights of competitors and whatnot in a marketplace. So when you look at it, we identified 10 areas of law where a GC would have to get up to speed and be smart to be able to advise the company on the implementation of Gen AI through things like operations and supply chain management, through things like HR, obviously, hiring practices, consumer handling of consumer information, targeting of consumers, so on and so forth. So, we really wanted to understand that. And then the next step of that was looking at what would that mean in a diligence context for a transaction. So there's always successor liability in any transaction, but on a cross-border basis, that complexity is multiplied. And then you would have to think about maybe looking at how have they used Gen AI in the company? Was it a company that was aware of legal liability potential, or were they just going headlong into building a capability, into a focus on innovation with a complete obliviousness as to the potential for legal liabilities. So knowing what you're buying and whether what you're buying is actually something you're going to be able to integrate and implement, and to do so without assuming other additional liability that can come back to bite you and undermine the value of the transaction in the long run. So these are issues where I think transactional lawyers and in-house lawyers have had to work together to think through how do they want to approach different assets and different investments and know what they're getting themselves into. The other thing that I think came out of that report is on the project management front. There's been a lot in the headlines over the years about law firms that have invested in project management capacity and innovation in tech.
Yeah.
We surveyed 50 General Counsel or in-house counsel of major corporations around the world who handle cross-border work for their multinational companies.
Yeah.
And we asked them, have they noticed a difference in the way firms handle their work when they're in a cross-border transaction or when they're in a cross-border regulatory situation or cross-border restructuring? And by and large, they told us in focus group conversations that really nothing has changed, but there are particular pain points that they have now that they have always had, which is they don't feel they have good lack of access to local guidance when they need it.
Right.
There's a lot of gatekeeping going on by lead counsel. There's a a lack of transparency, a high degree of opacity about cost, efficiency, and management.
So even with all these investments into tech, that promise to the client, these issues will be resolved, 15 years on is still not resolved.
Right. And you will get better quality advice as a consequence, right? And I think ultimately it's because the definition of legal project management comes across as being something so technical and administrative that nobody really understands the value add.
Right. Yeah.
And there is really a very interesting potential for value add when legal project management is done well.
Yeah. Yeah.
And it's done, best when the person with that expertise who's helping to orchestrate the local counsel can interface with the client and understand the business interests that need to be satisfied with the legal advice, and how to take legal advice from being something that's on a page, where it's up to the client to read between the lines and make their decision, to being something where the client is getting good early stage and steady guidance to help support an investment or a transaction, and then being made aware of things before it leads to firefighting and reactivity. But it's something more proactive where you can actually flex and make a decision. So I think that's an area where we also see coming together with what we started the podcast with around the risk environment and the regulatory environment. There's a need for a capability that can flex with the dynamism of the landscape of the regulatory terrain. And maybe just a closing thought is reminded recently of a quote by the Roman historian Cicero, which says,
of course, everyone's obsessed with Romans lately.
Is that right? Is that right? Okay.
Go ahead.
So you might have come across this recently as well, but the quote is, the more laws, the less justice. And, what that's really speaking to, and you look at the EU this way, and you look at, the US this way, the more laws and regulation there are, it becomes more likely for somebody to apply them in an arbitrary way.
Yeah.
So if you haven't made the right donation to the right political party in the US, then you might be more likely to be subject to a DOJ investigation than somebody who has. And that's not an unlikely scenario, unfortunately. Yeah. So you really want, a streamlined situation with less laws on the books that are applied. And, and we need globally to think about how do we get back to the rule of law as opposed to the rule of politics. And that's a
very wise thought.
it's an unfortunately difficult situation, and I'm afraid that, and this has come up in the panel yesterday, and maybe the last closing thought. When I go to Dubai, or when I'm in the Middle East, or I'm in other parts of the world, there's a dynamism there that's able to happen because they're not being bogged down as much by the excess of regulation that companies experience here, and are really holding the market back, the economy back. And people need to understand that's not just affecting the companies, that's affecting the consumer, that's affecting the livelihood and the lifestyle and the quality of life of people on the street.
Yeah.
And that connection is missing somewhere along the line. And so there's so much more economic energy being unleashed in Southwest Asia and in Dubai and Singapore and Southeast Asia than we're coming close to in Europe. And I think we're very much at the risk of being left behind globally if we don't correct our course rather soon. So that's where this geopolitical discussion comes into play as well.
Great. Well, Eric, thank you so much for joining me this week. It's always a pleasure. And actually to be able to see you in person, it's lovely. So thank you for joining. And hopefully you'll be back hopefully next year.
Yes, I hope
let's
so
make
too.
it an annual thing.
Yeah, let's do it. Yeah.
To the listeners, we're on Spotify and Apple Podcasts, and we'll be back next week for another episode.
Thanks so much, Meg. Good to see you.
You've been listening to Counsel Culture, the Business of Law podcast brought to you by Byfield. Thanks for listening. Don't forget to subscribe and join us again next week, where we'll be discussing some more of the biggest stories in the legal sector.